Have you ever wondered what the future holds for Bitcoin? As the world becomes more digital, Bitcoin continues to pique curiosity and garner attention. It's fascinating to observe how late institutions are joining the Bitcoin bandwagon, like a parade that's already halfway down the route. This tardiness could create ripples in the cryptocurrency pool, perhaps even waves. And here's a thought to chew on. With a Bitcoin IPO slated for January 2024, the Bitcoin narrative is about to take another intriguing twist. With a Bitcoin IPO on the horizon in January 2024, things are about to get even more interesting. Before we delve any further, let's clarify two essential terms: IPO and ETF. An initial public offering, or IPO, is the process by which a private company becomes publicly traded on a stock exchange. It's a significant event, marking a company's transition from private to public, opening it up to a broader range of potential investors. Companies hold IPOs for a variety of reasons, most notably to raise capital for growth and expansion. Now let's switch gears to exchange-traded funds, or ETFs. These are investment funds that trade on stock exchanges, much like individual stocks. ETFs are designed to track the performance of a specific index, sector, commodity, or asset, like Bitcoin. They provide a way for investors to diversify their portfolios without buying each component of the index or sector individually. So, how do these concepts relate to Bitcoin? Well, come January, we're expecting to see a Bitcoin IPO and a Bitcoin ETF. In the case of the Bitcoin IPO, a company that operates within the Bitcoin industry is planning to go public. This is a big deal because it signifies the increasing maturity and acceptance of the cryptocurrency sector in the mainstream financial world. Then there's the Bitcoin ETF. This is a fund that intends to track the performance of Bitcoin. By buying shares in this ETF, investors could potentially gain exposure to Bitcoin's performance without owning the cryptocurrency directly. This can be an attractive proposition for those who are interested in Bitcoin but prefer to avoid the complexities and risks of direct cryptocurrency ownership. So, as you can see, these are two significant events that could change the Bitcoin landscape. Now, let's talk about the elephant in the room, the late arrival of institutions to the Bitcoin party. You see, institutions, with their established ways and hefty regulatory frameworks, are often slow to adapt to new trends. In the case of Bitcoin, they've been especially hesitant, primarily due to its volatility and the regulatory uncertainties surrounding it. However, as blockchain technology gains widespread recognition, with companies from Adobe to Alibaba implementing it into their operations, institutions are starting to realize the potential of Bitcoin. They're seeing the value in having a decentralized digital asset in their portfolio. We're talking about insurance giants, venture capital firms, technology firms, even shipping companies. They're all gradually dipping their toes into the Bitcoin pool. What does this mean for Bitcoin's value and the cryptocurrency market in general? Well, when institutions start to invest, they bring in massive capital inflows, often leading to a surge in price. Plus, their involvement lends legitimacy to the asset, attracting more investors and further driving up the price. Their late entry, however, does not mean you should sell your Bitcoin. You might be wondering, with all these big institutions stepping in, should I sell my Bitcoin? Our answer is a resounding no. And here's why. Firstly, the arrival of big institutions into the Bitcoin scene is not a signal to sell, but rather an affirmation of the value of Bitcoin. These institutions, with their vast resources and research capabilities, have recognized what many of us have known for a while. Bitcoin is here to stay. Their arrival is a stamp of approval on the legitimacy and potential of Bitcoin. Secondly, let's talk about the impending Bitcoin Initial Public Offering, or IPO, and Exchange Traded Fund, or ETF. These financial structures will provide a platform for a broader range of investors to participate in the Bitcoin market. With the IPO and ETF, Bitcoin will be accessible to more people, potentially increasing demand and therefore its value. Thirdly, holding on to your Bitcoin is a vote of confidence in the long-term potential of this digital asset. Bitcoin has shown impressive resilience over the years, weathering various storms and coming out stronger. It's not just a speculative asset, it's a store of value, a digital gold, if you will. Lastly, remember that selling your Bitcoin now may mean missing out on future gains. The Bitcoin market is notoriously volatile, but its overall trajectory has been upwards. If history is any guide, your Bitcoin could be worth significantly more in the future. So, keep your Bitcoin close and watch the space. The future looks bright for Bitcoin holders. Remember to like, share, and subscribe to Beyond Money Mindset for more videos.